This is the man who crashed the stock market. From crashing the stock market to making millions of dollars from it, this guy sure has quite the interesting story. Here is the man who crashed the stock market and how he did it from the comfort of his home. Naveen Rama, better known as Navinder, was a British trader who went down in history after a wild trading session that saw him log off right before the biggest drop in US stock market history. Navinder worked from his mother's bedroom in West London when he made an estimated $800,000 in just 3 hours of trading. And although it sounds like something out of a movie, Navinder's incredible day in the markets is all too real. It was May 6, 2010, and the S&P 500 index had been extremely volatile due to the debt crisis in Greece. Navinder started trading that morning and quickly began buying up electronic mini S&P 500 futures contracts. These are essentially derivatives that track the performance of the S&P 500 and allow traders to bet on the direction of the stock market. Within a few hours, Navinder had pocketed $800,000 in profits and decided to log off and go for lunch. But within minutes of leaving his post, the market took a turn for the worst. Just as he walked out the door, the S&P 500 plummeted 8.8%, its biggest one-day fall since the terrorist attacks of September 11. It was the start of the flash crash. By the end of the day, more than $1 trillion had been wiped out from the US stock market and investors were left stunned and confused. So what caused this sudden and dramatic collapse, and what did Navinder have to do with it? When we think of major stock market crashes, we often picture greedy bankers, shady brokers, and other Wall Street players orchestrating complex schemes to line their own pockets. But the culprit behind this shocking crash was actually a lot simpler. A guy in his mom's bedroom. Okay, maybe not the most obvious suspect, but hear me out. Navinder wasn't your average retail trader. He specialized in trading M&E S&P 500 futures, a type of derivative that allows traders to bet on the price movements of the stock market index. Now here's the thing. These mini futures contracts let traders control 500 shares of the index for every point move in either direction. This means that, with just $2,500 in collateral, Navinder could effectively buy or sell 125,000 shares of the S&P 500. It is like using a lever to amplify your trading power, but also increasing your potential losses. In essence, Navinder was playing a high-stakes game of financial poker with the market, trying to predict whether the prices would go up or down. If he guessed correctly, he could rake in big profits. But if he was wrong, he could lose everything just as fast. So why was Navinder making these massive trades from his mom's bedroom? Well, because he saw an opportunity to make a lot of money. You see, the global financial crisis had hit the markets hard, and many investors were scrambling to get out, while the getting was good. But Navinder saw the writing on the wall. He knew that the worst was yet to come, so he decided to double down and bet against the market. When the government bailed out the banks and the markets began to stabilize, Navinder was left holding the bag. But instead of panicking and selling, he held on tight and waited for the market to rebound. His patience paid off and he turned his $2 million investment into $15 million in profit. From then on, Navinder became known as the man who crashed the stock market. And he didn't just crash it once. There were other instances where Navinder's massive sell orders caused the market to plummet. On one such occasion, his trades accounted for a staggering 20% of all sell orders for E-mini S&P futures. It was like he had the Midas touch, except instead of turning everything to gold, he was turning everything to losses for his unsuspecting victims. So how did Navinder get away with manipulating the market? Well, it's all thanks to a little-known loophole that allowed him to make huge trades without revealing his identity. You see, when you trade through a broker, they don't ask for your name or social security number. They only need your account number to execute your trades. This meant that Navinder could hide behind a fake online persona and make trades under false pretenses. He was like a phantom trader, striking fear into the hearts of investors and causing chaos in the markets. But eventually the jig was up. The authorities caught on to Navinder's shady dealings and shut down his account, but not before he made a ton of money. According to some estimates, Navinder made over $40 million from his successful trades. That's enough to buy a private island or a fleet of luxury cars. But Navinder was never really flashy. He didn't flaunt his wealth or live a life of luxury. He was the same humble guy who started out in his mom's bedroom. As for the crash itself, the SEC launched an investigation to determine what caused the flash crash. They looked at everything from faulty algorithms to rogue traders, but they couldn't find anyone to blame. Eventually, they closed the case without filing any charges. Some people still believe that Navinder was behind the crash, but there's no concrete evidence to prove it. Maybe he was just a small fish in a big pond. a blip in the radar of the financial world. Or maybe he was the big fish, the one that got away. Whatever the truth may be, Ninder's story is a fascinating look into the world of high-frequency trading, where algorithms and computers make split-second decisions that can move the markets. It's a world that's shrouded in secrecy and intrigue, where fortunes are made and lost in the blink of an eye. When news broke of Ninder's involvement in the flash crash, many people were outraged. How could someone make so much money by destabilizing the entire stock market? Others saw Ninder as a Robin Hood figure, a regular guy who took on the establishment and won. But the truth is, Ninder was just a guy who saw an opportunity and took it. He wasn't motivated by greed or a desire for power. He was simply a guy who wanted to make a quick buck. But Ninder's story isn't just about him. It's a story about the system that allowed him to thrive. The system that allowed him to manipulate the markets and make millions of dollars. It's a system that needs to be fixed if we want to prevent another flash crash from happening. Ninder's story is also a story about the nature of risk. Ninder wasn't afraid to take big risks, and when they paid off, he made a fortune. But when they didn't, he lost everything. It's a lesson we can all learn from. Sometimes in life, we have to take risks, but we need to be prepared to lose. If we're not, we could end up like Ninder, left with nothing after a risky trade goes south. Finally, Ninder's story is a reminder that the markets aren't always fair. Sometimes they reward those who play the game the smartest, regardless of whether they're playing by the rules. It's a lesson we can all learn from. We need to be smart and savvy when it comes to the markets, and we need to be prepared for anything. Otherwise, we could end up like the unsuspecting investors who fell victim to Ninder's scheme. If you enjoyed this video, please leave us a comment below. What other stock market mysteries would you like us to investigate? We're always looking for new ideas for videos. Thanks for watching. Until next time.